Thank you, Ratnakarji, and thank you, Taxation Society, ONG committee, for having us on this panel. If you ask me about the journey, well, interesting, I would say, very fruitful also. I came here to work with a corporate in 2006. Again, part of a multinational group. I was managing about 10 countries, their tax, finance, and legal matters based here. And when I moved out of that and started my own firm in 2014, beginning 2015, it was the first license of tax consultancy being taken from DMCC. The license category existed even in DED, but they never wanted to give that license. So then I had to ask the DMCC legal head that I want this activity. So he said, no problem, take it. It didn't make any difference for them except the license revenue that they were getting. So interestingly, I set it up in DMCC because of that. And at that time, a lot of people were laughing that this guy is doing tax consultancy in a country where there are no taxes,
Right.
So, but now I think the things have changed.
So even though we never had tax, the UAE had double tax avoidance treaty with more than 100 countries, despite the fact that there was no taxation.
So we had, at that point also, we had treaty with over 94, 95 countries, and now of course it has gone up to 140 or so, of which the operational treaties at that point were also 75 or so. Now it is of course about 100 or so. But the unfortunate part is, again, a lot of those literature is not available. A lot of tax treaties literature is not available. You have to go to other country and find UAE's treaty with them.
You have to go to International Bureau of Financial Documentation where
so
you can
IBFD or other sources that you have to use to get the treaty documents. It's interesting.
Rajiv? FTA used to issue regular reminders practically every day for people to register for the city registration, but nobody bothered and nobody was doing the registration. Finally, they took the extreme step of notifying the deadlines for city registration by in February 24. So since then, the pace of registration has increased. And so I'll start with Nirav. What are the practical issues which you have faced in the course of city registration for mainland entities such as LLC, joint stock, civil companies, sole establishment, and permanent establishment?
So, sir, thank you, but I must say one more thing, that apart from registration and impact assessment, a lot of things that companies and corporates prepare for is the restructuring their own business model. And therefore the restructuring is in a lot of focus at the moment. When we come to registration, see, we had different challenges. They started with MRA tax portal. First, they made it mandatory that your VAT data has to be updated.
Correct.
Because unless you have updated VAT data, you cannot have city registration being done. Now, VAT data was very ad hoc. People had not registered the right legal entity type. People had not done the updations there. So all of that first took people by surprise that, oh, I first need to fix this,
Correct.
then go this. Now, other problem is that, unfortunately, the FTA came up with their own list of activities, which is not comprehensive enough to match exactly with your license. So then how do you match, and you have to find something which is almost near to that, and therefore it kind of covers you. So that's another side of the challenge.
But tax has to be paid irrespective of what activity you carry. It will not match with your license.
But the problem is if you do it correctly, then you have to again go and correct also. Now, what happened is that some of the foundations and other structure that we registered prior, where there was no option to register as foundation, right? It came only a month back. So then we had to deregister the earlier registrations and ask for a new registration under the new category. So they did understand that because the type was not there, so they just amended it and gave it. But you have to go through that entire process and make sure that your data that is going in is correct. And for different type of person, for offshore companies, you want them registered, they kept insisting on trade license. But by very nature, you don't have a trade license. Now 3 times the query comes, and if 3 times you answer the same thing. So these are the kind of teething trouble, as I would call, we have. Of course, those are getting addressed over a period. But then, of course, there are this kind of issues.
Were you able to register sole establishment in civil companies?
Yeah.
Sole establishment,
You can do it as individual.
including civil companies also. Okay.
I think the basic issue is following IFRS. Nobody follows IFRS in its true sense. They twist and turn and modify to what they want to report. And it's very, very common across UAE to see multiple or consolidated books being prepared for multiple entities, for audit, for reporting, without having standalone books. And this has been going on for last 20 years, 30 years, and now you come in and why are you asking this question? We're doing it all. I mean, a lot of larger groups, I have seen for one of the very large group also, 22 entities, owned by a single owner, preparing one consolidated book, audited, no standalone financials. All are in one tax group for VAT. So you only have one reporting, one return, and all that matches with the consolidated financial. Standalone, nahi banate hain. So, I mean, when you start raising that question of having individual, cross-linking, multiple.
That's going to be a major challenge.
Now this is only one example.
I have a very interesting
I'll tell you, like you say, contracting. One of the largest contracting company, the client. They have to mandatorily take license in every emirate. Because otherwise they can't take the contract.
Exactly.
Right?
And sponsor also from that.
Sponsor also separate, different legal entity. Now for CT we needed grouping and all that, so we streamlined the sponsorship part of it because now we are allowed to own, so that's not a problem. So we managed to do that even before.
No, in Abu Dhabi and all, you need to have a local sponsor pack.
No, so we moved all that out because now everywhere in each emirate you are able to own that 100% under their laws.
Does the accounting, business purchase accounting, or it's also covered that?
No, so you will have to follow IFRS standard for consolidation
That's fine.
to apply to that. But since the conditions are 95% and above,
That's right. Same.
you will have to do a line by line consolidation.
But will the goodwill be considered in that case?
What is the accounting treatment you have selected under IFRS that will be followed for tax purposes?
Yeah, but then accounting standard says control.
So control, if you have 95% plus ownership, you will have control.
No.
In
That
more
will
often
follow
than
the
not.
business purchase accounting.
I know, so like I'm saying that the condition for tax purpose is much higher than your IFRS.
Correct.
IFRS can go by intent and the control also. Here I have to have 95% rights in ownership, voting and dividend. So if I'm getting all the three, by default the control will be.
Correct. No, what I'm trying to
So
say
if I'm meeting those conditions, I will not have to be in that question mark whether I have that or not.
the question is again, is it a simple aggregation or you have to actually follow the IFRS principle?
You have to actually follow the IFRS consolidation standards.
But you will not be allowed to have goodwill
So
deductions.
those adjustment which is as per IFRS,